Hello, everybody. I am giving a talk to business owners or presidents of businesses who are crypto beginners, newbies. I have an hour to talk. Hopefully it's less, then I can take questions. I want to do a practice run here. I'm doing this talk on Monday. So if you have feedback for me on how I can make this simpler or better, please let me know before Monday. I appreciate it. And I hope even if you're not a beginner, you can enjoy this talk, okay? So what I'm going to start with first, before I even introduce myself, I want to just clear up a very important term, which is decentralization. And just to explain, because a lot of people don't understand, centralized are things that have one point of failure or one point of control. Your money in Bank of America is controlled in one database there at Bank of America. The people who run Bank of America can change the entries in that database. Distributed is different. Now, Google has central control over their database, but the data is distributed through different servers all around the world. So it can't go down. It doesn't have one point of failure, but the control of the data is from a central point. Decentralized is like the internet. There is no center. There is no one point of control, and there's really no way to stop it. You can remove a node or remove a leg from it, but the information can route around it. And decentralization is the world is moving towards more decentralization, especially with crypto networks, which is what we're going to talk about. And that I wanted to mention that before I even introduce myself, because I have been all about decentralization for a long time. When I saw the web in 1994, I was excited because it was decentralizing the distribution of information. So I had an idea to start an e-commerce business online, tried many products. Turns out the best product for me was adult products. I bought the domain sextoy.com for $70. I also had the idea to decentralize marketing. Instead of me buying advertising, let a bunch of different people do their own marketing. And then I just pay them based on results. I created one of the first affiliate programs in 1996. I ran this business for over 20 years. But in 2016, I hired a CEO to replace me. I was sort of over it. Turns out Jeff Bezos is orders of magnitude smarter than me. It was no longer that fun. And the web has become very centralized. So meanwhile, and I sold the company actually in 2020. Thank you very much. In 2015, when I saw Bitcoin, actually, I saw it before 2015. And like most people, when first time you see crypto or Bitcoin, you say, boy, that looks stupid, or that's not going to work. Most people dismiss it at first. I did. In 2014, I saw, okay, something's going on here. When the price started crashing, I started accumulating. 2015, around $315, got me into it. And then in 2017, when everything started going straight up, all the crypto started going straight up, I noticed, wow, there's 1,000 other tokens, or more than 1,000. I had already left my other company, was looking for something to do. I said, you know what I'm going to do? I'm going to study crypto. I'm going to go down the list of the top tokens. What's the number 2 token? I'm going to study it. Then I'm going to go to the number 3, then the number 4. And after I learn, I make a YouTube video, which helps me learn more. I get feedback. And that's what I started doing. And I was going to only do it for a year, but after a year, I couldn't stop. And all I do all day, every day, is study crypto, which is why I'm here trying to explain it to you. Starting from the beginning, you know, the internet decentralized the ability to transfer information. So before, you know, the 90s, if you wanted to, it was very difficult, not only to talk or expensive to talk to someone in another country. I mean, to send them a photo or video was very expensive, never mind to one person, but to broadcast to many. I mean, you had to get a TV station to agree to broadcast your idea. It was the only way. The internet made it so that anyone around the world can share information, video, audio, text to anybody in the world almost for free. So this was pretty incredible. But you could never send money. Why not? Because, I could send you a photo, but I could make copies of the photo, send it to other people. You could make copies. You can't do that with money. When you send money to somebody, not only does that mean if I send you $1, not only does that mean, well, now you have the dollar and I don't, but everybody has to know that you have the dollar and I don't. That was called the double spend problem. Computer scientists have been working on that problem for decades. And finally, Satoshi Nakamoto, or whoever that was, solved the problem with Bitcoin. And since that was solved, there's all these other projects using the solution to, just as the internet decentralized the transfer of information, crypto networks decentralized the transfer of value. Just like all of a sudden we could send information to anyone around the world almost for free, we now are able to send money to anybody around the world for free. I don't like the word cryptocurrency. There's no hope in changing that word. It seems to be stuck. But the problem with the term cryptocurrency is we're not really talking about currency as we understand it. Bitcoin is the currency of the Bitcoin network. Okay, but it's not really currency the way we understand it. So better terms that I like, that I understand people aren't going to use these terms, but just so you understand what I think we're talking about here, these are networks. Crypto networks, or it's a platform that you can build on, okay? And it's also about digital ownership. We're able to have a scarce resource. There are only 21 million Bitcoins. In other words, like I talked about with a photo, anybody can just make infinite numbers of copies. With crypto, you can have scarcity and you can own it. And that is the real revolution, that we have these crypto networks that we can build on, and we have digital ownership, digital scarcity. So crypto networks are better software for value transfer, period, end of story. It is time for financial institutions. And also this is going to affect the web, social networks, so many things. And the bottom line is, Bank of America will exist 10, 20 years from now, but they'll be on new software. That software will be based on crypto networks. That's where it's going. This is just a software upgrade. And to further explain what I mean, AT&T, this chart here, it starts in 1996, goes to 2021. This is its stock price. In the 90s, when the internet started, there were people who said, oh my God, AT&T's in trouble. They had their centralized software that they used to distribute information. And people said, wow, AT&T's in trouble. The internet is going to take over. Well, 20 years later, here we are. AT&T still exists. And instead of using that old software that they were using, they use the internet to move information all around. Great, they're still here. However, notice the stock price hasn't moved. Similarly, what I believe is that NASDAQ is going to exist in 10 and 20 years. But instead of using the software they use now to trade assets, they'll be using crypto networks. In fact, we're going to talk about decentralized exchanges built on crypto networks. And I believe that NASDAQ will exist, but they'll just be using new software. And something tells me their stock price might not continue in this direction. Visa already is doing a pilot program so that right now, when you go and go to a store and you use your Visa card, the money comes from your merchant, that runs your credit card through the processing to a bank, and then to your bank, and then And then, I mean, from your bank to the merchant's bank, and then, you know, a few days later, they get the money and 2 or 3% in fees. And that's how it works. Well, instead of using that old, slow software, Visa is experimenting or piloting using this USDC, which is a dollar token on the Ethereum network. Coinbase is a partner in this dollar token. And what they want to have is that someday, again, Visa will exist. You'll use your card, or it'll be on your phone. And when you go to pay your merchant, instead of it going through that old convoluted system that everybody uses now, it's going to take a dollar token and send it directly to the merchant, instant settlement with eventually no fees. And again, Visa will exist, but they'll have a lot of competitors, and I would be concerned about their stock price. Usually the old leaders do not become the leaders in the new world. And let me talk about one more thing here in respect to this revolution. It's more, you know, in the news you hear a lot about it's digital gold, you know, it's a currency. It's more than that. It is a software platform for all value, and it's more than just the financial system. But here I just want to talk about the entire financial system will be rebuilt on crypto networks. This, you know, if you want to, I have a YouTube channel, I'll give my props at the end. Bankless podcast, Bankless, bank, L-E, and then L-E-S-S, is a great podcast. They do a lot of crypto shows. I got this picture from them, giving them credit. And what this shows is the difference. The crypto networks will be turning the financial system upside down. It's flipping everything. Instead of everything requiring permission, we have permissionless. And this is very, very powerful. So the existing system, and this chart it's not totally right. The base layer of our existing financial system actually is not gold. It's US Treasury bonds. So this is sort of wrong here. US Treasury bonds are considered the riskless asset, the base layer reserve asset for the US dollar system. That is the main asset of the central bank. Then the central bank has independent banks built on top of it. And then on top of that, you have applications like Visa and PayPal that work, you know, with the banks. And then there are people and businesses who work with those softwares. Now, the thing about this system is every step of the way you need permission. You know, the central bank needed to work with the government originally to come up with their agreement to be the central bank. Every bank needs permission to become a bank. And the central bank has not allowed a new bank charter, I believe, in over 10 years. And then if you want to write software that allows people to move money around and do things with money, you need to get permission from these banks, very difficult. And then any business or people that want to use any of the software, you know, it's within a certain region, they need to get permission. And with all of those restrictions, fees are high. Okay, let's look at the new world, crypto networks. Now we've turned it upside down. This is referring to the Ethereum network. The riskless base layer reserve asset of the Ethereum network is not US Treasury bonds, it's the Ethereum token. Now, you know, you may hear, oh, the Ethereum token, that's not riskless, right? Because the price moves up and down a lot. But within the Ethereum network, it's riskless. It's the asset that is the base layer, is part of the protocol of Ethereum. Anything built on top of Ethereum theoretically has more risk to it than the Ethereum network itself, right? So the Ethereum token is the base layer reserve asset that if you believe in Ethereum, you believe in the Ethereum token. That's what secures the network. How it all works is another long story that we won't get into today, trying to keep this under an hour. Now, on top of that, there are many applications. One application, and there are others like this, but MakerDAO is sort of like a central bank. They use the reserve asset as collateral to create dollar-pegged price tokens. Then there are applications that can build on top of a maker and use this dollar token to facilitate trading. And then there's other applications on top of that. And I'm not going to get into all of these. There's so many applications that people who spend full time all day, every day, trying to keep up with crypto don't even know all the applications, and more are launching every minute. I mean, it's craziness, and the growth is tremendous. So, and this chart is actually, it's like a year old. It feels like 100 years old. But anyways, point of the matter is here, when MakerDAO created its sort of central bank type of application, they didn't need to get permission from anybody. They just built it. The software is open. Anybody can build on it. And when Compound Finance, we'll talk about that one. Uniswap, we will talk about that too in a minute. When the developers built those applications, they didn't need to get any permission from anyone. They just wrote the software. All of the code, in a sense, the APIs are just open and free for anybody to build on. Not only that, if you want to build your own wallet and you want a trading application inside of it, you can just go and take the Uniswap code and stick it in your wallet. You don't need permission. At every layer, we don't need any permission. So what is going to grow faster? The platform that requires permission every step of the way, the permission is rarely granted, everything is slow and expensive, or the software that allows any developer anywhere in the world or any user anywhere in the world to become to use these applications, to build these applications without permission, which is going to grow faster? The answer is obvious. So the big question a lot of people have is, well, what's going to be the next? What's the next Google? What's the next Amazon? What's the next Facebook? And I remember when the web started, everyone liked to talk about, oh, Federal Express, they can now, instead of calling the 800 number to get your tracking number, you can see it on the web. Newspapers, instead of mailing it out, they're making PDFs of their newspaper and putting it on the web. Okay, that's interesting. But the things that become the next biggest, the next trillion-dollar, systems are the things that couldn't be done before, that could only be done on the internet. At Google, Facebook, you couldn't do these things before the internet. So the next big winners will be things that were not possible before crypto networks, and things you can't imagine. When the internet started, nobody said, oh, wow, someday we're going to have photo sharing and comments and all these things that Facebook is. No, nobody thought about it. And if you thought about it, you didn't think it was going to be that big. So one area that I believe is going to be hugely disruptive is called decentralized exchanges. And let me just, so right now, all trading that goes on in the world, this is trillions of dollars of trading that goes on, uses what's called order book trading. It's an order book system, right? You put an order in, I want to buy 100, someone else wants to sell 100, then there's market makers who put the two together, you connect and trades happen. On crypto networks, there's a new way of doing trading that's only possible on crypto networks. It's called an automatic market maker, sometimes AMM, automated market makers. And there are many of them. The biggest one right now is Uniswap. You can see them in pink here. The way this works is there'll be two pools. So instead of matching up someone with Apple stock and someone with dollars, and I want to buy 100 and I want to sell 100 and put them together, there's two pools of Apple stock and US dollars, and big pools of millions, if not billions of dollars. And there's an algorithm that sets the price based on the size of each pool. And anybody can become a liquidity provider, right? Again, permissionless. Not anybody can become a market maker on the NASDAQ, right? Between needing permission, it is difficult. Anybody can just go and load money into these pools and earn fees on the transactions. And it's open to anyone in the world to trade. When you trade, also, when you trade at NASDAQ, you're basically giving, or if you go to E-Trade and you want to trade, you give them your money. You no longer own that money. They facilitate the trades, but they own that money. They owe it to you, but you don't own it. When you trade on a decentralized exchange, I will go with my Apple stock is not tokenized yet. So whatever, if you go with your Ethereum token, I own it. I have it in my wallet and I want to trade it for, the Uniswap token. I never give up custody. I have my Ethereum token and then I trade. When I trade, it just switches and now I have the Uniswap token. I never gave up custody. The price is set by an algorithm updated constantly based on the pool sizes. Anybody can become liquidity providers. This stuff is growing so fast. You can see the growth chart here, 50 billion, 100 billion. This was, May was like this crazy month. And then this is, when you hear in the news, crypto crashes, this is the crash. We went back to where we were the month before, right? That was the crash. We're already higher than we were there. This May was just some crazy month. That's crypto. And just to show you also the volume, the growth in trading volume on crypto exchanges in 1 year, up 11,000%. Uniswap, the biggest, grew like, I believe it's 50x in a year. So its token price up, when you see tokens, the Uniswap token up 10x, up 1,000%. Yeah, well, its volume grew 50%. At 50, the token price up 10x, the volume growth up 50x. I don't know if it's expensive. I like it. I'm a hodler, holder. We say hodl. HODL is hold. That's how we spell it in crypto. We say it's for hold on for dear life. HODL. I'm a hodler. Another revolution. And again, I'm not recommending you invest in these tokens here. This is a fast moving world. Even if Uniswap is the best today, they might not be the best tomorrow. And unless you're on top of this stuff, Compound is another one. I like it, but I'm not telling you to buy this token. I'm going to get to some investment advice, not a financial advisor, but let me just tell you what the point I want to make here is Compound is doing something that cannot be done on the old fiat legacy software, can only be done on crypto networks, and it will disrupt borrowing and lending. Again, instead of matching borrowers with lenders and you want to lend money, so you go and you give the bank your money. Now they have your money, they take that money and they give it to somebody else who, they don't have until they return it. And, you probably know how the existing banking system works. In Compound, there were two pools, depositors and borrowers. The interest rate is updated in real time based on the size of the pool. You never give up custody. If you want to be a depositor, again, you don't give up custody. You add your money to the pool, your tokens to the pool, and you can remove them at any time. Nobody else can remove them. This is based on a smart contract. It is unhackable. You put your money in. If you borrow tokens, so the interest rate is based on the size of the pools. Well, if a lot of money goes out and it's not coming back, you know what happens? The interest rate goes up really high. And this is based on an algorithm. That interest rate goes up, which makes it so that people who borrowed it becomes very expensive. So now they want to put the money back into the pool. And the depositors who, what if it gets to a point where there's almost not all the depositors can take their money out? Well, their deposit interest rate is going to go up. So the only risk in this system, and this is sort of never happened, but the risk is that, oh my God, there's not enough money. I can't get my money out right now. But if that happens, the interest rate I would be earning for waiting would be very, very high. So this to me is a very low risk system. And interest rates, I don't know if you've heard about the interest rates that you can earn on dollars in crypto have been 5 to 15% for a few years now. And you know, maybe they'll come down, maybe they'll stay high. I don't know, but it's not all like just some sort of scam, you know. And when you talk about, oh, how can they pay interest rates? Must be a scam. For thousands of years, depositors have been paid an interest rate of like 5% or more, right? It is only in recent, very recent history that we've had this thing of 0% interest rates, which if you're going to look for something that's a little bit of a scam and sketchy, it's the 0% interest rates, not 5%. Another application that is booming, stablecoins, which are, so these are tokens that are not risk. You know, your Ethereum token can, you know, it goes up 10% on a every day, down 10%. It's like nothing, very volatile. But there are tokens that, and there's so many of them, and they have different ways that they're held stable. And this is a whole nother, I could spend an hour just on all the different stable coins and how they all work. But the bottom line is they're meant to hold a price. A lot of them are just dollar pegged and they're backed by dollars, but there are some that are just purely algorithmic. But anyways, this is another application. Instead of, you know, in America, it's pretty easy to get dollars, but if you're somewhere in the world, getting your hands on dollars can be difficult. In crypto, almost anybody can get dollars. People can even create dollars. If you just get collateral and back it and build a system, you can create applications that create dollars, and then you can have dollars that you can send anywhere in the world for almost no fees with instant settlement. A lot of demand for that product. This chart here shows on the left-hand column, this is growth rate, right? This one is 1,000% growth rate. Look at, if you see Terra USD, the dark blue one here, you look at the chart, it's like, oh, it's been flat since May. Flat at 1,000% growth rate. These lines that are all going up is not the amount going up, it's the growth rate going up, right? What was I going to say? The growth rate going up, and the stablecoin market cap is now 100 billion. So, and one thing I'm going to talk about in a minute is, you know, the U.S. government is waking up to this. The U.S. government is listen, I don't want to get too political here, but many of you may have noticed that some of the people in power are not the most competent. And the reason they're in power, the reason we could afford to, you know, spend trillions in Afghanistan and give the Taliban 100 billion in weapons is because we have the ability to print money. If we didn't have that ability, we wouldn't have been able to do that. The people who are in power would not be in power. And they know that, and they're going to fight to stay in power. So there's a war coming. That's I'll talk about that in a minute. Before I talk about that, I may have convinced some of you to, boy, I should get my feet wet. I should dip my toe into this pool. I should start learning. And that's one of the things that, you know, don't put all your money in this right now. It is volatile. It is difficult. You can get wrecked quickly, but put it in an amount for your education, right? Think about how much would I spend on an education, because you're going to learn by getting involved. The other thing is 1% in crypto. Here's the idea. If you get into these, you know, if you get into, I'm going to talk about Ethereum. I love Ethereum. If you get into Ethereum, 1% of your investable money in Ethereum. Okay, if you're wrong, if, you know, it's super volatile and the day after you buy it drops 50%, which could happen easily. Ethereum can drop by 50% in a week. Easy. Okay, it's 1% of your money you lost. The idea, though, is in 3 to 5 years, that 1% became 10%. It 10x's, right? Or more. So you don't have to go all in here to look smart in a few years. Keep in mind, we're in the late innings. These things go through cycles. We have the boom hype cycle, and then it crashes and everything's horrible for a year or more. We're in the late innings here of boom times. It's been going straight up since, I shouldn't even say not straight up, since it's been going up since January 2019. It's been going straight up since, you know, 2020, you know, whatever, March 2020, when the Fed started printing. If you want to get into, even with only 1%, dollar cost average it. If you want to put in $10,000, do $1,000 a month. And if if all of a sudden it falls 20, 30%, okay, that month you throw in a few thousand, right? There's a lot of tokens out there. There's a lot of what's the next best, this and that. Just crypto's the next best thing. Don't go to crypto and then look for the more risky. The one asset I believe that you can set it and forget it, at least for a few years, is Ethereum ETH. Everything else could be awesome and then suddenly be not awesome and suddenly be, in fact, I love this story because I had Kyber is a decentralized exchange that around here, and these numbers looked huge. It was 3 billion, and Kyber had 40% market share. And that was they were the two leaders. It was Kyber and Uniswap, and I owned the Kyber token. And then 6 months later, Kyber grew by only 200% and is now flat in its volume growth. And look at what happened to everybody else. And within 6 months or less than a year, Kyber went from 40% market share to who are they and where are they? You can't even see them on the chart. That's how fast these things move. You got to be careful. So if you want to set it and forget it, if you want to study every day, you stay up. I like Uniswap, but I'm looking at the chart every day. If you're not doing that, don't even bother. So ETH is the only one I think you can set and forget. There's also, your investment strategy, look at it differently. The 60-40, 60% stocks, 40% bonds is, there's a lot of talk about how that's very old school, doesn't really work anymore. And, whatever. The strategy that I look at is this barbell strategy, right? So I may have a lot of cash, US dollars sitting in Bank America earning 0% interest, in JP Morgan I'm happily earning my 0% interest because I know I can get that money pretty safely. And maybe you spread it in a few banks. So you have the FDIC, depending on how much money you have. I have that. And then I have a lot of Ethereum, right? On the Ethereum blockchain that can go up or down. And the way I like to look at my portfolio, I like to have this attitude because everyone's like, oh, is it going to go up? Is it going to go down? I have no idea. If you think then probably the opposite's going to happen. Okay. You don't know. And when I look at my portfolio, well, if crypto goes up by like 100%, I'm happy. I have a lot of Ethereum. That thing's going to go up by, a ton, and I'm going to make a lot of money. I'm happy. What if the crypto market or all markets crash? Well, I'm going to be happy because I got a lot of cash and now I can buy things cheap. Oh, but everything crashed. What about your Ethereum? I don't care. I mean, maybe I care, but I'm prepared for that, and I'm going to hold, and it'll come back later. So I don't care, or I am prepared for a crash and a boom and flat. And in the middle of the barbell, you have other assets, your house, and S&P 500, I would look at as a middle. It's like, okay, it may keep ticking up and it may drop by 50%. I don't know, that's sort of in the middle here, and you can have some of those things, but I would focus on the edges of this barbell strategy. I've talked about Ethereum. I want to give you the quick bull case on Ethereum. And that is, I believe this bull case holds true until people really understand these facts. These have been facts, I believe, since 2020. There's a little bit of execution risk on Ethereum that people hold some people back. But if you're like me and you've been watching the Ethereum community and the developers over the last several years, execution is the least of my concerns. I mean, they're unbelievable. And there's some talk about in 2016, things were slower than people expected, but they have been on schedule, sometimes ahead of schedule with launching and upgrades. And, so anyway, so not everything here is launched, but Ethereum with Ethereum 2.0, which is launching within, probably around the beginning of 2022, a better monetary policy than Bitcoin, already The issuance rate on Ethereum is less than Bitcoin. Yes, Bitcoin, everybody talks about how Bitcoin, there's only 21 million. It's a fixed amount. But, and then Ethereum, oh, we don't know how many coins there'll be. Like as if Ethereum already, because on every transaction now they burn Ethereum and the fees are so high, Ethereum actually is already less, doing less issuance than Bitcoin. It is more solid digital gold than Bitcoin. It also has a better security model. Proof of stake, and I'm not going to get into the details here. And if you want to start studying this stuff, study the difference between proof of work, understand how that works, and understand Ethereum's proof of stake system. And it is more secure. There's a guy, Justin Drake, who talks about ultrasound money, if you really want to get into the weeds. And Ethereum is more secure with lower issuance rate than Bitcoin. This is the thing that people don't realize. And until everybody that becomes accepted truth, I am a hodler of Ethereum over Bitcoin. Ethereum also is a platform for building financial applications and Web 3.0. This most people know, and you can't build anything on Bitcoin. Or at least to date, nothing has successfully been built on Bitcoin. They're still trying with Lightning Network, and I hope them success. And I'm not saying Bitcoin's going to zero by any means. Bitcoin's doing great, and no one got fired for holding Bitcoin, and it's okay. I just think Ethereum's better and more. To me, I trust it more. The developer community is the largest and amazing, and they're really just impressive. And Ethereum, when it comes to, Bitcoin has the biggest market cap, but Ethereum leads on every other metric. Number of users, number of developers, number of application, number of dollars locked up, total fees paid in transactions, whatever metric you want to come up with, Ethereum is the leader. I mean, there's probably a few they're not the leader on, but eventually they will. So that's my quick, dirty bull case for Ethereum. Another thing to keep in mind, if you are an investor, the most important thing to watch is central bank printing money. There have been, the two recent crypto bear markets coincide, especially look at 2018, the bear market literally started right here when the balance sheet started contracting. Stocks didn't start crashing until, later in this cycle. Crypto is the furthest out on the risk curve. When tightening starts, crypto goes first. You can see where the two bears were, and you can also see why we've been going straight up. And the central bank now is threatening to do some tightening, and pay attention to that. That is that. And if everything starts crashing because the central bank's tightening, and then the central bank comes in and says, hey, we're going to print another 5 trillion, you're going to want to get back into your crypto or get in more, right? This is the most important metric to watch. And also, I didn't explain here, this chart is central banks total assets. This is the whole world. You can also look at, there's just, what the US is doing, but to see the central banks, they're all printing more money. And it only takes, crypto is still very, very small within the size of the whole financial market. And if they print 2 trillion, it doesn't take a heck of a lot of that to seep into crypto to drive prices higher. One other point to pay attention to, because once you get into crypto, it's a slippery slope. Most people, first you look at Bitcoin, then you look at Ethereum, and then you get what I like to call shitcoin fever. It's like you want to buy everything and the newest and it all, and then you realize, oh my God, this is stupid, and then you run back to Bitcoin, and then you end up in Ethereum. That's the. But here's the thing: when you get in there and then you start studying, and then you start seeing, oh my God, this token has really fast transactions. This one's really inexpensive. Remember, there's something called the scalability trilemma. Decentralization, which is very important, and I'm going to talk in the next slide here now and 2 more, that the war is coming. Decentralization is very, very important. And if you sacrifice decentralization, you can make things go faster. If you sacrifice security, you can, again, make things go faster. A lot of other blockchains brag about speed and low prices. And the reason they have that is because they're sacrificing security and decentralization. I don't think that is a trade-off that is worth it. Okay, one last thing I want to talk briefly regarding investing is right now there's been a lot of hype about NFTs. That stands for non-fungible tokens. Fungible is, so dollars. If I loan you $1, when you pay me back $1, you don't need to give me the same dollar because dollars are fungible. If I give you a ticket, the ticket might be, any ticket because I want to go to the show, but if it's attached to a seat, it's not really fungible, and if I loan you my car, I expect to get back the same car. It's not fungible at all. Non-fungible tokens really are going to affect so many things. The title of your house, instead of it being stored on paper at a government office, it could be a non-fungible token stored on the blockchain, right? So many things are not fungible, and including art. And this is where there's been a lot of excitement lately. People, so now you can have one piece of art and sells for a lot of money. There's all these sort of collectible sort of art fashion things getting huge valuations. These things have value, but right now it's a hype market. I wouldn't buy any of these sort of fashion art NFTs right now. I think prices will be lower in a few years, but there's also more that isn't here now, but is coming soon, which is now an artist can make a piece of art and put programming into it so that every time whoever bought it sells it to somebody else, that the creator gets a percentage of the transaction forever. So, so that the royalties, there's all kinds of programming that can be built in. Bottom line is NFTs, non-fungible tokens, also can be used for assets and games. There's so much going on with it. It is very exciting, but if you want to invest in this space, I would be very careful right now. Okay, now the US government, like I said, they are not fooling around. This is, again, I could talk about this for an hour. Mnuchin tried to make it, they want to make it, the government wants the ability to have surveillance on all transactions. And right now, actually, it's a public blockchain. They can surveil it. They just don't know that, but they want surveillance. They are able, you're able to, see what's happening on the public blockchain, but they want like other people to give them the information because they don't know they can just go and get it themselves. But they also want the ability to reverse transactions, the ability to take your money, and those are the main two things. And so they do not like crypto and they want to be in charge. And so Mnuchin tried to pass something. He didn't do a good job, didn't get through. Then Treasury, and listen, I don't think Yellen and Biden know what's going on here. Somebody at Treasury does, though, and they snuck a law into the infrastructure bill at the 11th hour on a Thursday, and the vote was on Friday. And this infrastructure bill is a must-pass bill, which means, you're not allowed to change anything. And none of the senators liked this bill, which makes it basically illegal for anybody to touch crypto. That's sort of the long story short. And we couldn't pass an amendment on it because it's this must-pass bill. Now it's going to the Senate. If this bill passes, this is a serious attack on crypto. Crypto community has been awakened. Coinbase also recently has been awakened because the SEC is threatened to sue them for coming out with a product. Like it's heating up. I believe the war has begun, and I think it's going to get. And so this also, between the central bank tightening and the government coming after crypto, this is what could start the next bear market. And so be careful and watch it, and know which politicians are on the right side of the future and vote accordingly. I have a friend who told me this years ago, which I thought was interesting, which was he lived in Europe, and he said, my grandfather said you should always have a little gold hidden in your closet. And he thought, well, what is the point of that? We live in this country, we use our paper money, everything is fine. And, and this was in the last time you needed gold was in World War II, 30 years ago, whatever. Well, a few years later, there was war, there was inflation, and all of a sudden he realized, oh, now I know why it's a good idea to have that gold in your closet. It was the only way to buy milk, right? Similarly, now, though, it's digital gold and it's not your closet. This is, I'm just going to give a brief, just so you know this is possible, and maybe take a photo on this, and someday this is sort of advanced, but there is a way to have some pretty secure privacy. And this is totally legal. There's a lot out there about, well, if you want privacy, you must be a criminal. No, and here's a way to do it totally legally. On Coinbase, you buy your Ethereum, and instead of leaving it in Coinbase, if you leave it in Coinbase, it's not yours. They hold your keys. And I trust Coinbase, they're fine. But if someday, if this war progresses and the government wants to steal money, they can get it from Coinbase, okay? So you can send it away from Coinbase to a MetaMask wallet. There's a lot of wallets. MetaMask is a good one. So whatever, I mentioned that one. Now you have your own keys. You have your own wallet. You're holding Ethereum on your wallet. Nobody can take it from you, right? But when you do your own custody, if you lose your keys, you lose the money. There's no way to go to get it back. You have it in MetaMask. Now you could send that money to what's called this tornado.cash, where you send the Ethereum in. Again, you're not giving up custody. You're putting it into this thing that mixes Ethereums around, Ethereum tokens. And then you go and you withdraw it, and it has no history because it's been mixed with all this other Ethereum. Get yourself a new laptop on a VPN. Don't use any email. Don't have any connection to it. Get a new MetaMask on that laptop. Withdraw your Ethereum to that laptop. And there's also a thing called hardware wallets, which further hide your private key. Ledger hardware wallet is one that I know and is trusted and works well. As long as you don't sell that Ethereum, you haven't done anything that requires you to pay taxes. You haven't done anything illegal, but now you have what is the equivalent of the modern gold hidden in your closet, which, let's just say, I hope I never have to use, right? Because, we'll see. We'll see where things go with the political environment we are in. And so how to stay on top of this thing, the best investment, I talked about holding Ethereum or whatever, but the best investment is learning, understanding what's going on. Things are moving real fast. Best investment is knowledge. Second of all, do not get your information from journalists or the news. Usually when I see an article, even in the Wall Street Journal or the New York Times, it's either wrong or old. Listen only to experts. These are people, and when I say experts, it's not someone who's elite and went to some college or works for New York Times. It is people who have built, right? Vitalik Buterin, creator of Ethereum. If he talks about something about Ethereum, I listen to him, right? Don't listen to someone who's interpreting what he said. Listen to him. Listen to builders. And I use Twitter. My greatest hack has been I use Twitter. I follow only 70 people. Every person that I follow, I've vetted. They are genius builders, right? I mean, whether it's Elon Musk or, there's a lot of great people out there. There's a guy, Balaji, who I love. Anyways, I'm not going to get into that whole list. And I only read things that these brilliant people post. I don't have the Twitter algorithm pulling up things that are based on who I follow. It's only what these people post. And I only read things that they recommend I read. And so I am not getting noise, and I am not listening to morons. That is the key to staying up with this stuff. Finally, if you want more info from me, want to contact me, have questions, or just want to follow, davelevine.com is my domain. You can always go there to see where I'm at, youtube.com/Dave Levine, DOTCOM. That's my YouTube channel. I make videos about, crypto mostly, or pretty much exclusively. And my Twitter, if you want to find me on Twitter, follow me on Twitter, or again, message me at DaveLevine0.com. Well, thank you for listening. Yeah, so that was the talk. For those of you who listened, like I said, I'm giving this talk on Monday, and then I'm going to let people ask questions. Feel free to ask me questions right now, on YouTube, and give me any advice to make this talk better for my, for my audience. Thank you. Let's see how I stop this.